You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And we are still in recovery mode after Money 2020 last week. All this talk about a fintech slowdown, if it's really happening, there was certainly no signs of it in Las Vegas last week. I haven't heard an official number yet as far as the number of people who attended the Money 2020 conference, but I have to believe that it was at or above their all-time high of 12,000 or so. And just the number and opulence, I think opulence is the right word, of the vendor parties and even the show, the game that everybody brought to the exhibit hall certainly did not indicate an industry that was too worried about any kind of imminent decline. So we've got plenty to share from that, including 3 interviews we gathered while we were there. The Chief Product Officer of Silicon Valley Bank, Gagan Kanjlia, was kind enough to speak to us. Paul Kesarwani of a Buy Now Pay Later solution startup called Cushion. And William Mellis, who's part of the Money 2020 organization himself and part of a new launch of a research platform called 20fold. And we'll be getting into all that in just a bit. First, let me just remind you, you can always find out more about the Best Innovation Group by visiting our website, big-fintech.com. I would in particular suggest that you check out the 5GPT solution, our new collaborative effort along with our friends at Bonify. I'll post a link in our show notes so you can find that more directly, but you'll find that as well as all kinds of other good stuff like the Innovation Club in the Products tab at the Best Innovation Group website. Also want to thank and welcome our latest sponsors, CUNA, Credit Union National Association. Anybody listening in the credit union space, I'm sure I don't have to tell you how much good stuff they do for the movement, and we really appreciate their support here. Just looking at their calendar really quickly, even though I kind of think of Money 2020 as the last of the really big conferences of the year, they've got a couple more coming up still on the CUNA Council side that you may want to check into. Their CFO Council and their Lending Council both will be meeting in the month of November. CUNA.org for all things CUNA, CUNAcouncils.org if you want to get more specifically directly into that information. Another thing that happened while I was out at Money 2020 with the time differences, I'm glad that I was actually already awake, or else this would have been fairly panic-inducing. About 3:45 in the morning West Coast time, I had a missed call from my daughter, who's studying abroad in Barcelona right now. And then a quick text from her saying, I'm on my way to the police station. That's not something a dad really wants to hear at 3:45 in the morning, which for her was already kind of after lunch hour, as I recall. When I reached her very quickly, she's safe and fine, but she had her bag stolen. I'm told not exactly an uncommon occurrence in Barcelona. Lost her wallet and her laptop. Also kind of an interesting kind of telling point about the way the world works these days, that I was relieved she didn't lose her phone, so she at least could kind of stay in communication. The reason I'm mentioning this right now is it's a great story about credit unions. My first thought was, okay, how am I going to deal with this? Obviously, you got to stop the credit cards, you got to get new IDs, you got to get everything reissued, except you've got the added problem that someone's overseas. Her addresses that are actually listed on all these are in the U.S. Good luck trying to get someone to ship a new replacement credit card to a different address than is on file. Well, she's a student at the University of Wisconsin and a member of the University of Wisconsin Credit Union. And she actually beat me to the punch in terms of getting to some of the other IDs that she had in her wallet. And by the time I talked to her the next time, and I figured that, okay, well, a university credit union probably has some procedures in place to deal with folks who are studying abroad. Sure enough, they said, no problem, we'll get you a new one. She had a new card in her hands in 48 to 72 hours. Kudos to the University of Wisconsin Credit Union. Kudos to my daughter for acting so quickly as well. But, one of those stories that always comes up is, okay, you really want to work with a big bank because, when the push comes to shove, they've got the resources to help you. Well, guess what? The big bank that I was helping her with actually did a fine job, but not as fine a job as the UW Credit Union did. Very impressive stuff. Speaking, and that was I'm sorry, I should be clear, that was a debit card, which is what she really lives off of, like most of Gen Z. And speaking of debit cards, while we were in Las Vegas at Money 2020, at kind of the tail end of the conference, the news broke about the Federal Reserve's new proposal of what they're looking to do with debit card interchange. The short version of that is cutting it by about a third in terms of revenue. We've been through this dance before, back with the Durbin Amendment. This would be the first reset of that pricing. Don't have time to get into the details here right now, but take a look at the website if you would. I will post a link. I'm going to be doing a blog kind of giving you the heads up on exactly what to be looking for. I think we can safely say this is just the beginning of the story, but it's a very important story to be tracking. So do check that out. Also on that same general topic, the points guy, as you probably know, the guy who deals with rewards programs, particularly airlines and things like that. I was surprised to see some signage over there at Money 2020, actually branded to the points guy, and his major message was oppose the Credit Card Competition Act. Which is another thing we've covered before here in terms of the other side of the coin on interchange and attempts to actually regulate credit interchange and take that down dramatically. And I thought, points guy, that's odd. What dog does he have in that hunt? Then all of a sudden it occurred to me, talk about an existential threat, because as everybody says, and if you need proof that this is actually not just a false, an idle threat, one of the beliefs is, well, if you cut credit card interchange, you can say goodbye to your rewards programs. In fact, I think I've seen ads that even make that same statement. I think the points guy knows that. And I think the points guy knows that if rewards programs go away, he goes away. So I'm sure he'd have a business someplace, but it would certainly hit him arguably even harder than credit cards. So the fact that the points guy was kind of banging the can on this one, I found very interesting. And also, speaking of existential threats, Silicon Valley Bank, as everyone knows quite well, had an interesting situation with liquidity back in the March timeframe. Depending on your definition of existential, as you'll hear from their chief product officer, they never really went away, but they do have a new owner. They're now a subsidiary of First Citizens Bank. We first ran into this. We've discussed this already. This is kind of a continuation of an earlier conversation from the podcast. Noticing them at Finovate, kind of coming back onto the public stage, or at least in terms of their signage there. And here they were again, quite prominently at Money 2020. Gagan Kanjlia, their chief product officer, was kind enough to spend some time with us and give us a little more background. I think things are finally starting to wind down a little bit here at Money 2020 on the last day, and I've managed to catch up with Gagan Kanjlia, who's the Chief Product Officer of SVB, and somebody I've really wanted to talk to, so I appreciate you taking the time out of a busy schedule.
Well, thank you, Glenn, for inviting me to this podcast. I'm looking forward to talking to you.
We had a discussion over lunch the other day, and you mentioned, I was not aware of this, but when I saw SVB's branding at Finovate back in September, quite frankly, caught me a little bit off guard. And I guess that was your kind of formal kind of return to the marketplace under the SVB banner. That was your first kind of coming out party, is it?
Yeah, Glenn, you're not the only one. As you know, unlike what you might have heard and seen, Silicon Valley Bank never went away.
Yeah.
SVB is now a part of First Citizens as a division, but the brand promise and what we offer has been in continuous operation since March.
Well, I mean, my first reaction was, wow, didn't expect that. I heard, frankly, a couple of people jokingly say, oh, they must have already written the check.
Yeah.
But I could say, well, if that were the case, they could obviously be branding First Citizens. But then the more I thought about it, general press aside, the target audience for your services, young startups and fintech companies and things like that, I would think the SVB brand still has a ton of equity. I'm guessing that's what you guys have found too?
Yeah, I mean, the SVB brand represents something very important and very precious, which is we're the bank for the innovation economy. That's been true for 40 years. And that is, as you said, it's startups, it's venture-backed companies, it's post-IPO companies, it's also a lot of private equity companies as part of a global funds business. And this is global, not just national.
Good point, yeah.
And that's true today as it was earlier. Now, a lot of these companies need a bank that is tailored for the innovation economy. And that's what SVB means to them. And therefore, we are back in the market. Our Yes SVB campaign is essentially a tongue-in-cheek reminder
I love that. I love that branding. Yes, SVB. That's
because
great.
we're basically saying that, we are the bank, just like we always were. Our
Deal with
solutions
it.
and our services are live as they were, and we haven't changed.
Yeah.
And
And
what
you're
made
running
us-
as a self-contained unit within First Citizens, at least from an
Absolutely.
operational product
And
standpoint.
this has been one of the really wonderful aspects of being part of First Citizens. It's a much more diversified financial institution. As you know, they do retail banking, the big presence, branch presence, 900 branches plus. But they've kept SUB intact, and we are branding as SUB a division of First Citizens.
And you mentioned, because one of the reasons you're here at Money 2020 is to talk about the new products that you're launching for the benefit of your customer base. And you mentioned that by being part of First Citizen, you've actually been able to accelerate that roadmap.
We have absolutely been able to accelerate the roadmap because when you combine the assets of Silicon Valley Bank and First Citizens, you can actually find a lot of complementary things. And we've been able to find them over the last 6 months through a very structured and disciplined process. And we're actually leveraging those assets to do what we would have done over years. We're doing it now in quarters.
And I know one of the things that, I don't know if it's literally being launched here, but one of the ones you're kind of focusing here on is SVB Go.
Yes.
That's a digital platform?
It's a new digital platform tailor-made for the innovation economy and its clients. It's a single pane of glass where all clients of all types, all maturity levels, every part of the lifestyle of a life stage of a client in the innovation economy can see an aggregate of all the relationships with SB in one platform. So this platform is tailored to save them time, to save them money, to help them do better with treasury operations.
Now, when you mention the overall life cycle, what do you think of as the sweet spot? I mean, when do you get involved with a company, and at some point do you say, okay, maybe, and now it might be transitioned over to First Citizen, or can they stay, stripe size and beyond with somebody like
It's
you?
a really good question. In fact, this is at the heart of what makes SUB special. We bank companies that are at all stages. So companies that are just inception stage and they might be angel funded, they're not yet even venture funded. We'll bank them, we'll bank venture funded companies. We have a lot of companies which are public companies and they're multinational.
Yeah.
And we bank them. And that's one of the big secret sauces of SUB is when we bring our advisory and our acumen to a client, we're bringing over like tens of thousands of company experiences, graduating them, helping them increase their probability of scaling. And we channel all of that into our advisory to our clients. Every dreamer, every innovator which has ever started a startup wants to scale.
It's like you say, even pre-seed. I mean, they can get involved. There's no clear minimum at which it makes.
In fact, we have packages that are tailor-made for each of these segments, different pricing structures, different solutions, because we understand what each stage needs is very different. And that's actually one of our biggest differentiators.
Interesting. Now, one of the things we've spent a lot of time speaking about RTP and FedNow and instant payments. I noticed in some of your recent press releases, you mentioned that you offer receive capabilities on RTP for all of your clients. And then now you're coming in 2024, you'll be offering send capabilities as well. And I believe you'll also expand that to a FedNow offering?
Yeah. We're very excited because payments are a big inflection point. With, as you mentioned, real-time payments, we already have receive. Send will be launching later this year, will be generally available next year to all clients. Plus, our FedNow capabilities will be working on that next year. Between that and ISO 20022, these three things are a big change. It reduces friction in payments, enriches the payments flow, increases the data, reduces fraud, and that's what we're looking forward to, is a new future for payments designed for the innovation economy.
Do you see that you've got to kind of sell that idea to your client base, or are they hungry and are they coming to you looking for this instant payment capability?
It's been crazy, off the charts demand.
Really? Good.
Everybody wants, and why is that? Because real-time payments, for example, reduces friction, allows companies, especially like in embedded finance, to push payments faster, and then everybody benefits.
Wonderful. So, have you been, this is probably a pretty obvious question, but the reaction you've gotten here at the booth, I mean, any surprises? I mean, the kind of reception you've received, some flat out surprise of seeing the SVB name, or are you seeing more existing clients or prospects, or what's the show been like?
Yeah, we definitely saw a few surprises, a few gasps, a few, oh wow. But more than that, I think it's the clients who've come and said, thanks for being here. We love SVB because of what it does for us. And what they see is validation that we're here. We didn't go anywhere. We're just like we were, and they can expect the same services. So a lot of warm hugs, a lot of fist bumps, a lot of cheers.
Well, when you really get down to it, it had absolutely nothing to do with the service or the product offering or anything like that. It was a purely exogenous, macroeconomic situation. So it makes perfect sense.
That's the crazy part about this, Glenn. There are so many hungry companies out there. They want to build great solutions themselves. And they want banking to be easy for them.
Yeah.
And that's what we do so well for them.
So if people want to find out more about how they can do that with you, what is the best way? Through the website? Or?
Yeah, go to the website, put in your lead information, and we have a very good system to get back to you.
Is that SVB or Silicon Valley Bank?
Go to svb.com.
And you use both, but your branding will be more around SVB than actual spelling out.
SVB, a division of First Citizens. We were SVB before March, and we're SVB now.
Gagan Kanjlia, Chief Product Officer for SVB. I really appreciate taking the time. Great conversation.
Well, thank you, Glenn.
I really appreciate Gagan taking the time. That is, to me, an absolutely fascinating story. I've continued to talk to some people, including those in the fintech space, going, wow, that is a really weird idea, trying to perpetuate. But I'm kind of bought in. I really do believe that brand still has equity. Go out to their website and take a look at, they're clearly talking to a very specific group. The first thing you see is things about from MVP to Series A, B, C, D. The average person, when they see MVP, is probably thinking of a sports event as opposed to a minimum viable product. Then you start getting into the different funding rounds. They're talking to a specific audience, and I think they're doing it quite well. One of the other things that I thought was interesting that I saw was, talk about imitation being the sincerest form of flattery. I think 4 different times on stage, I heard companies referred to as the Stripe of, choose your niche, or the Plaid of choose your niche. So, in terms of a way to get people to get comfortable with, visualize and really kind of grasp what it is you're trying to do with your solution. So Stripe and Plaid, who, again, are relatively new companies in the grand scheme of things, have now established themselves to the point that they're what everybody is comparing themselves to. A company called Cushion AI, a buy now, pay later solution, actually did refer to themselves on stage as the Plaid of buy now, pay later. Paul Kesarwani talked to us. Actually, I caught up with him a little bit after the show. After seeing his presentation, I thought both his solution and his own story about buy now, pay later was fascinating. So let's take a listen. I'm here with Paul Kesarwani of Cushion.ai, who did a session at Money 2020 this week. Love this title, Buy Now, Pay Later. It's later, now what? Which I thought really encapsulated it well. Paul, you've been at this, you've had your startup. You are the CEO and founder of Cushion.ai. And you've been at it for, I guess, would you say 7 years now?
Yep, seven years.
And you told a great story about how you pivoted Cushion into a little bit of a different model, very specifically because of your own experience with buy now, pay later, which is what really caught my attention. So maybe you can kind of share a bit of that with our listeners.
Yeah, absolutely. The consistent theme with Cushion has always been, let's help the consumer with their finances. And it has been 7 years because we technically spun up almost 2 full companies within this one company and 7-year time frame. So the first product we had built programmatically negotiated with the banks to get you your overdraft fees refunded. So if Chase or Bank of America or anybody was hitting you with bank fees or overdraft fees, 5 years before ChatGPT, we built our own negotiation engine that would log into the banks on your behalf, negotiate, and get you a bunch of that money back.
That's a email-driven engine, or
it was actually email plus online chat. So we had systems that would go into American Express and start a chat with a human agent and do the whole thing automatically. And we use snail mail for the longer tail of FIs that we did not want to plug into directly.
Very interesting. Okay. I'm sorry, didn't mean to interrupt. Go ahead.
No worries. Happy to answer all that. It is pretty intriguing because it was we were a little bit ahead of our time, I would say.
Say
But
so, yeah. I mean, I've seen, I don't know if you saw, there was a case that went viral where somebody lost their luggage on United Airlines and built a little AI
yes.
routine to actually deal with the call service. We had them on the podcast a couple of weeks ago.
Oh, no, wait, no, I'm definitely going to check out that episode. I love this kind of stuff. Um, yeah, on our end, it was just more of helping the consumer, get some temporary relief, get some of that money back. And during COVID, this product blew up. We went from 0 customers, 0 revenue to 100,000 paying customers, 3 million ARR, $15 million refunded to our customers with a very small team. And while that felt great and all, we knew that we were combative with the banks, which is not something that you can build a big scalable business off of. But we also knew that there was a deeper issue causing a lot of these bank fees. And at that same time, I was also going through a lot of changes in my life personally, really needed to buy some stuff for my girlfriend at the time, now wife, and I had no money. So I was leaning into buy now, pay later, which triggered us looking at our data set a bit deeper to find out, are consumers doing this? And the trends were pretty staggering. And we noticed that the growth of buy now, pay later, like Afterpay and Klarna and Affirm, was insane. And the whole team decided to start shopping with buy now, pay later. And before we knew it, we realized this is completely unmanageable because you have to log into each one of these apps independently to manage each loan. So if you have 3, 4, 5 loans, plus your subscriptions, plus your utilities, plus your rent, it is completely unmanageable. And that's when we decided we need to build for this new world where buy now, pay later is going to become part of your daily life and part of your monthly budget. And we noticed that nobody else was even thinking or talking about this. So we dropped everything and got to work.
And I think, as you just mentioned, you interrogated your own data set that you had from your original business model, right? This is how you really, not only your own personal experience, but that's how you kind of determined how people were using the product.
That's exactly right. I mean, the easy thing to do back then, we had amassed 100,000 paying customers, or we had hundreds of millions of Plaid transactions. We could have actually sold that business independently and called it a day, but we had so much rich data and we needed that as the seed for the next product, our bill pay platform for BNPL. And that's why I told our investors, this is going to be a long run. It's going to take a couple of more years. Should we go for it? And they're like, absolutely. This is a much bigger impact on the consumer and a much bigger company that you can end up building. So we did.
Makes sense. I noticed you've raised Series A funding. That Series A raise was before or after you kind of launched this BNPL? Did you have to go back to those folks and say, hey, got a new angle I'd like to take?
It was in the middle.
Okay.
It was such an odd fundraise because you typically get to product market fit, hit $1 million ARR, and then go raise a Series A, or at least that's how it used to be. The goalposts have changed a bit recently, but we actually hit 3 million ARR in less than a year. So we smashed the Series A goals, but I basically raised the Series A on, we'd started building the bill pay product with BNPL. So we had a prototype of that. We'd shut down the first business and we had a vision of where we were going. And it was an incredibly difficult Series A because of that. It was so not traditional. And it took a couple of investors who had faith in us to say, you know what, we've seen what you're capable of. You've built a unique product once. We know you can do it again. And we got the $12 million round done in early 2022.
Not to mention that you're doing it in the middle of a very unique, shall we say, fundraising environment too. And you still got past that skepticism. That's pretty impressive.
Yeah, I think that was it was a rough time.
So you also made the observation on stage, and I think we're kind of alluding to that a little bit here. Today's buy now, pay later bears very little resemblance to the original idea of the BNPL that was pitched, I don't know how long ago, 2 years, 3 years ago.
Yeah.
I mean, you gave the example of the hamburger on credit, which is kind of bizarre too.
Yep. Yeah, it's completely transformed. And I mean, I need to reiterate this. I am a fan of buy now, pay later, and I do use it all the time. It's just that the consumer is not thinking through things deeply when they decide to buy something. And they're not reading the terms. We have consumers who don't even know the names of the buy now, pay laters that they've signed up for, which is really scary. And so, yeah, the transformation was this traditional pay in full, no fees, no interest for expensive things online, like a couch. And over time, it evolved and transformed into something that you can pay in 6, 12, 18, online, offline, $5, $500. And then the most crazy part was, as I'd mentioned, it's no longer just at the point of sale. Because BNPL providers needed to expand their scope and not want to rely on the merchants, they started saying, I'll underwrite you, Glenn. You are worth, well, you're maybe $500. That sounds good. Here you go. Spend on our virtual card. And then we'll break that into 4 payments. And that allowed them to get into every merchant and make money on interchange. And then the bank said, well, what about post-purchase? You've already charged this to your credit card. Would you like to split that up over time? So there's these constant permutations happening. And as a result, consumers have, dug themselves into a bit of a hole that's getting deeper by the day.
Which, I mean, one of the things, and maybe just to make it a little bit more real for people to visualize, I thought you showed the calendar view. One of the, the tools that you provide to your users is, like you said, the trick is tracking all these things that are then suddenly just hitting your cards, and often your debit cards, most likely. Maybe just kind of explain how that kind of, what you're doing to actually make it that easier for people to really digest.
Yeah, absolutely. The big thing for us was we realized that consumers needed an easy way to factor their buy now, pay later loans into their monthly budget alongside their rent and their car payment and the utilities and their subscriptions. And one of the things that almost all of us look at on a daily basis is our calendar. So we decided, let's build out a calendar view, which maps out visually all of a consumer's payments, broken out, by day and by week. And so a consumer can say like, oh, I owe Netflix $10 on Tuesday, and I owe Klarna, $72 on Wednesday, and I owe Geico and Zip, which is a BNPL provider, money on Thursday. And the calendar view is so powerful because a lot of times I'll actually just open my phone, look at the calendar and say, wow, next week is going to be expensive. And I'll start making some better decisions this week because I know next week is going to cost me quite a bit. So that's been a pretty quick and easy benefit, but also future looking. Let's check out next month. Let's do some prep for next month. So you can look into next month and say, oh, wow, I have a new buy now, pay later purchase I just bought, and those payments kick in on the 1st. I really need to be careful about how I spend over the next few weeks. So it's shining a lot of light on everything you actually owe on a monthly basis, not just the bills and subscriptions, but not the BNPL,
And I guess we're also kind of getting at this now too. You and I had a conversation before this that, the session you did was buy now, pay later. And if you go and visit the Cushion.ai site today, I mean, it's kind of, you've got BNPL kind of front and center. You've got Credit Builder out there too. But at the heart, this company is more than that. It's a bill pay company, from what I understand. And I guess you're going to be building out some more of that on the website in the coming days.
Yeah, so we kicked off with what's unique to us. Fintech, as you're very aware of, is a very crowded space, and a lot of businesses are just copying each other. So we wanted to lean forward with what we have that's unique, that's one of one. Our buy now, pay later aggregator, nobody has that. Credit building with the pay in 4, nobody has that. So we put those as front and center. But you are correct. We are a bill pay company at our core. And I'll explain what I mean by that and why we took this direction. Bill pay has existed for a long, long time. Most banks offer bill pay, and it sucks and people don't use it. And the problem is folks are like, oh, we have this product or feature or whatever, and then we'll add bill pay as if it's this like little thing that you add on. But the reality is we spent 30 to 40% of our lives working and 30 to 50% of our income paying bills. It is at the center of our lives. So we decided we are going to make bill management and bill payment the core, and everything else is additive to that. So you want credit building? Cool. That's a feature that we can add on. That's not the purpose of the company. And a lot of the features that we're going to lean into going forward are very innovative and exciting stuff in the bill management and bill payment space.
Well, you got me excited even beyond what I got from the BNPL site on stage. If people want to find out more, I guess the website is Cushion.ai. Is that the best place?
Yeah, we got the .ai domain 7 years before it was cool. So
really? You get it that long? That's amazing.
Cushion.ai.
Well, Paul, thanks again so much for taking the time. Enjoyed your presentation out at Money 2020 and enjoyed this conversation even more.
Thanks for having me. I appreciate it.
There was another piece of research up on stage at Money 2020, the McKinsey Digital Consumer Payment Survey. A survey of, I believe it's 1,800 American consumers on how they deal with digital payments, including things like buy now, pay later. They've been doing that annually now for several years, 5, 6, 7 years. Some of the conclusions from that were presented and actually included, I learned new things about buy now, pay later, as not a big user of it myself, but trying to keep track of it, and particularly the way it works just as a checkout option versus a full shopping experience if you go to the site of an Affirm or a Klarna or something like that. We'll post a link. I think that's also really good reading. Some other things about the way people are thinking about Apple Pay and other wallets that they are keeping track of. the McKinsey Digital Consumer Payment Survey. As I said, the link is in the show notes if you track it down on our website, or if you're listening at Apple Music or Spotify, it should show up if you click through. Money 2020 getting into the act themselves in terms of, for the first time, doing something that's not event-driven, but actually product-driven. A gentleman by the name of William Mellis, who is part of the parent organization of Money 2020, which is UK-based, which won't be too surprising after you hear his accent. They're launching a new platform called 20fold, and they actually premiered it at the show and definitely caught my attention. And let's hear a little bit more about that. At the end of another long day at Money 2020, there's never any lack of excitement. William Mellis, the Chief Strategy Officer for Essential, which is the parent company of Money 2020. William, thanks for taking the time. You're a busy man, I'm sure. You've just launched a new product called 20fold, which really caught my attention. Interesting stuff.
Yeah, so let me tell you about 20fold. So yeah, we launched it on Sunday night.
Yeah.
And we've been showing it at the.
You've got a booth just like
We've
all
got a
the
booth
other,
like
just,
everybody else, and it's nicely branded. So.
But it ties in Money 2020.
Money 2020.
Which actually, maybe that's a good place to start. I mean, how does the connection? I mean, this is the first kind of subscription-based service for Money 2020 to go into, right?
Yeah, it's a digital platform. Subscription based, and the simple way to think about it is it is the widest and deepest profile of fintech startups that then also overlays the ecosystem around that.
And we're talking globally.
We're talking global.
And I heard 80,000 companies.
80,000 companies.
Which is remarkable to me. I would have had a hard time thinking that there would be that many out there. So.
Yep, there are. So. What it has on the platform is we have pretty much everything you could find out about those startups. So the concept here is let's profile the whole ecosystem.
And just to clarify, when you say startups, you're starting right from the early pre-seed, seed stage, but
yeah,
this is also more mature.
Yeah, it goes all the way through to IPO,
yeah.
Right? And then you have a big debate about what startups are when they get very mature.
Yeah.
But in the early stage, it goes from unfunded, seed all the way through the different.
I mean, the Stripes of the world, would be here. People
there,
like that would be there. I mean, you're talking big guys, PayPal, yeah, exactly.
But, nobody needs to know anything
They
about
can
them.
find, they can
Everybody
do their
knows
own
who
research, yeah.
But some of the things that we can do are, if you take Stripe, we can show the people that were at Stripe that have gone into startup.
You can map the family tree.
We map the family tree of the people, and then
the PayPal mafia. Okay.
If the mafia has gone on into doing their own thing in a startup, then it'll track that and show you.
That's interesting.
So,
wow. So this is a subscription-based model.
Subscription-based model.
And I mean, from what I understand, no listing fee. So you're looking to get in a ubiquity. You want everything out there. So you're not charging to be listed.
No charging for being listed, and we collect. You don't need to give us anything. We will find the startup.
Can you give? I mean, can you say, hey, raise your hand. I'd like to give you.
There are two things you can do. You can say, because it's a data collection platform which sometimes misses the odd one. You can say, hey, you missed me, and all you have to do is put in your URL.
So there's a submit. Hey, you forgot about us.
You can stick my hand up and go, you forgot me. Right, here's all you have to do is put your URL in, and then we go get the rest.
So they don't get the right to decide what you've written.
No, yeah. Once they do, they can then claim their profile and add to it and correct anything that's wrong, and then we'll check whether we're.
And you can decide if they're being a little bit hyperbolic about their conversation.
And then we spend a lot of effort to make sure a couple of things. One is that it's mapped to a fintech taxonomy, so the pedigree of Money 2020 is understanding the industry. And so we've taken that into the product, so that whereas lots of other databases you can't get down, you can't interrogate it because it doesn't have that kind of backbone of a fintech taxonomy. So we have that, and that's kind of really important to us.
I guess that was you kind of answered my next question. Is the genesis of this product? Like you say, you understand fintech here, but what kind of gave rise to the idea that this was something that you wanted to pursue? Because it is relatively, it's obviously related, but very different from what people usually think of from Money 2020.
In some ways it is, in some ways it's not. So I mean, it started with me as the strategy officer raising the question, which was, is there a digital platform
Okay.
for Money 2020? And therefore, we looked at the kind of DNA and what happens in Money 2020, which is connecting the ecosystem. And obviously, we do that in a physical event here, which is everybody comes to. But people want to find out about the ecosystem throughout the year. So we've built it such that it is a data platform, right? And that you can then interrogate it and find out. And it works for partners or investors who are trying to find startups through a different.
I was going to ask. I think private equity, any type of investor,
VCs,
banks looking to acquire someone.
Banks looking to fill in their capability stack. So they may say, we need somebody who does this in this part of the world. It'll help them find them. It helps startups to find who they should be talking to, right? Both as a partner or as a potential investor.
I'm guessing a startup probably wouldn't have the money to subscribe, but their VC might.
Well,
you might
think that we signed one contract today, and it was with a startup.
Oh, really?
Who
wow.
was
Congratulations.
absolutely in. I mean, and that was, they saw it yesterday, and they actually signed the contract today.
Interesting. Okay, so
And that was a startup who their use case is super simple. We're going for a funding round, right? And the CEO said, I need to find who are all the people I should be speaking to.
Interesting.
That have invested in a business model that looks like mine, and we just showed him it in front of his eyes, and he said, that's months of work that you've just saved me.
Wow.
And he signed there and there.
As you mentioned, I mean, we get together here for Money 2020 once a year. You do it also in Europe. You're going to be doing it in Asia for the first time coming up.
Yeah.
But this is there, and you're updating this on a regular basis.
Yeah, daily basis.
Who's? You have a whole team. I mean, it must take a lot of hamster wheels behind the scenes to make this happen.
Remember, it's powered by AI, so we.
Maybe something that couldn't have been done if you would back another year or two.
Yeah. So, in many ways, we aggregate. So we take from all sorts of different places, and then, if you like, our intellectual property is using our understanding of
your expertise,
expertise to put it together. And so we have a news feed coming in from 55 different news providers.
Okay.
And then that's linked to you. We don't just ingest anything.
Sure.
Because but it's linked to if there is a company on the platform, a startup on the platform, or an investor on the platform, or a person on the platform that's mentioned in that newsfeed, it attaches it.
And then I'm thinking also, AI still needs a human interface, so you're probably having somebody take a look at that before it just automatically gets pushed out.
Yeah, well, what happens is it goes through a number of thresholds, and there are some human reviews if it doesn't meet certain criteria. And then we only publish onto the platform if we're happy that we're at the right level of quality.
Makes sense. So the goal is not to be, this is not the place to find breaking news. This is the place to find, validated news. Let's put it that way.
I think that's probably fair. But you can find all sorts of things on this platform that are quite
that you probably did not pick up in your daily news feed. Yeah, that makes sense.
So and we've got an AI tool that allows you to interrogate the database, which only runs in the environment, so it doesn't hallucinate.
Good.
We hope.
Good. Yeah.
Because it's being fed with a database that has been collated for Fintech, and we know we've got the quality in there. Mm-hmm. So you can ask it all sort of questions, like, in North America last year, tell me the top 5 business models that Fintech startups.
Okay, so it's not. It allows for free-form querying. It's not just you mentioned multiple tabs across where you can search.
There's multiple tabs, so you can search through basically 3 ways. There's a hierarchy taxonomy, which is a drill down, but the drill down is like unbelievable, right? In terms of headquarters, funding size, number of whatever you can imagine, but it's got taxonomy there. Or you can come in AI has hashtagged everything, so you can come in on a hashtag.
Okay, interesting.
Or you can ask
flat
AI
out
to the most strange question that you might want to answer.
The old Ask Jeeves, except with a lot more detail.
Indeed. Yeah.
So you're going formally live at the first of the year, at the beginning of 2024, but you're offering kind of a sneak preview.
Yeah, our customers today, we're signing up customers who've been to the show.
And they will have access to what is available now, but the full
The
full
global
suite.
suite and everything will be loaded as from January.
So if people want to find out more, if they haven't talked to you already here on site at the booth, what's the best way to get in touch?
Well, if they don't speak to us by the time the show closes,
Which they won't have heard this, so it's too late by then.
yeah. So that's just go to 20fold.com.
20fold.com and spelled out 20 or not the numeric, the
No, well,
TWENTY,
Yeah.
fold.com.
20fold.com and put your details in, and then we'll come back to you.
William Ellis, Chief Strategy Officer. Thanks so much. Can't wait to see more on this one.
Thanks, Glenn.
80,000. I still have a hard time getting my head around that number. It's obviously a global number, and I usually am looking more at the U.S. more specifically, and I'm sure most of our listeners are as well. Although I'm always pleasantly surprised by seeing people from Germany and Australia and things in our feed of folks who are listening to our podcast. We've talked about a few other solutions that are in this general vicinity. We actually spoke to Patrick Sells from True Digital recently, and also the Circle Fund, doing something along these lines too. Those are both U.S.-centric and a little more interactive, I would say, in terms of trying to forge connections, get people talking to each other as they look at these different things. It's more of a collaboration platform, whereas I would say that 20fold is more of a research platform. They can correct me if I'm wrong. I apologize, because I have not gotten a chance to dig into all the details. It's not fully out live in the wild yet. But again, 80,000 companies, I think there's room for more than one player. And it just says something, again, kind of going back to our original point, that the idea that fintech is slowing down does not seem to be supported by the facts on the ground and the level of interest we've got here. We've already talked quite a bit, so let me stop here, let you kind of absorb this. Appreciate again Silicon Valley Bank, Cushion, and 20fold for speaking with us. We've got a ton more content from Money 2020, so we'll be doing a second roundup of what we saw there with 3 more interviews next week. So do definitely make sure you do stop back in and check us out. Set a reminder, like us, subscribe to us if that helps, and if not, every Tuesday, new content. You can find us at the Best Innovation Group, big-fintech.com, or you can find us where you get your podcasts. Spotify, Apple Music, etc., etc. My name is Glenn Sarvati. You can find me via my firm, 154 Advisors, on X at 154 Advisors, or on LinkedIn. You can find the Best Innovation Group at Big Fintech, or our Grand Poobah John Best at JB Fintech. As I said, a lot more to come next week related to Money 2020, and then rolling right from there to Venture Tech, another really exciting show that's coming up that kind of rounds out the calendar for conferences this year. If I don't see you there, I hope to see you here back again next week. Thanks for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech. Email info@big-fintech.com. Or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.